What's up, everyone? It's March 11th, 2025. Pretty good day in the markets. Really cool leg counting. The Bullets had a leg one, pullback leg two. Bears had a leg one, pullback leg two. New high of the day, bar seven. And this whole price structure, or just bar seven, since the trendline break got its own two, three legs down, leg one, pullback leg two, pullback leg three. Went sideways, broke out, got a second leg here, leg one, pullback leg two. That became a second leg trap. There's also a second leg right here, so there's a three legs in that. And I thought this was actually one of the better trades today. There's 6 bars down here. So 1, 2, 3, 4, 5, 6. Leg 1, pull back. Leg 2. 2-leg pullback into the EMA makes 37, a nice short. There's also 3 legs within this leg too. So leg 1, pull back, leg 2. But then this leg had 3 legs. Leg 1, pull back, leg 2, pull back, leg 3. Then the Bulls had a turn. The Bulls actually got a meaningful breakout here. Leg 1, pull back, bar 54. Could say market cycle resets with 55 being a strong bar above the EMA. So let's just count 2 different ways. Leg 1, pull back, leg 2, pull back, leg 3, or if the market cycle resets because we're breaking above the EMA. Leg 1, pull back, leg 2, pull back, leg 3. When we get into the third leg, we're approaching the higher time frame EMA, and I liked 68 for a short. I did not take it because it's not my setup. I actually didn't take any trades today. 69. So the reason I like 68 is because it's a high one in a leg 3 trading range behavior. Big down, big up. High one in a trading range in a leg 3 is usually a better fade, and that's what we see here. We can fade that, and we're in profits quite quickly. Scalp into the EMA. If we go sideways, leg 1, pull back, leg 2, pull back, leg 3, or leg 1, pull back, leg 2, second leg trap, testing the breakout point, testing the midpoint. So pretty nice day. Really cool for leg counting. Where are we on the daily chart? We are trending on the daily chart. Bears are selling, approaching here. So each pullback is going to be a bear target. So next bear target's right around down here, and that's what we see here. Bears sold off. They reached here. They reached here. Then they actually reached a meaningful swing point on this day. They broke support here on these days. What day is that? On March 5th, they broke support, and we've been selling off. Now we're coming back into support from September 5th, 4th, 5th, 6th, that time frame. And we have a small bounce. We have a tail here, so not saying tomorrow's going to be bullish, but what I am saying is we have a few legs lower now. We have a good breakout, pull back, leg 2, pull back, leg 3, pull back, leg 4, and this bar is follow through for this bar, and there's a gap. This is a bull bar, so that's not the best gap. It's a small gap, but there's bad. Today's bar is follow through for yesterday, but today's bar doesn't close below yesterday's low, so it's actually bad follow through. It's follow through, it's just not meaningful follow through. Here's a 15-minute chart. Look at today's price action. Kind of looks like an expanding triangle. I don't like expanding triangles. My voice almost cracked when I said that. So we have 5 pushes. Push 1, push 2, push 3, push 4, push 5. Somewhat of an expanding triangle. We came up to a new high and sold off to the midpoint of the trading range because expanding triangles are trading ranges. They have multiple pushes in both directions. So we're at somewhat of a breakout mode on the lower time frames, but we still have momentum on the higher time frames from selling. Let's do the bar by bar. Gap down, bar 1 is a bear bar. Is this the 5-minute chart? Yeah, I don't know why I look like it look like more than any one bars. So gap down, bar 1, bear bar. Good for the bears. It's showing that the gap down is getting continuation. However, bar 2 is an outside bar, so that's not good. Bar 2 is an outside bar because it sold off below bar 1 and then rallied above bar 1's high. So that's an outside bar. Bar 3 is an opposite bar. Could be a pullback for now. Outside bars are trading ranges, and you typically don't want to buy the high of an outside bar unless the context is good. Context, I don't think, is good to buy the high of bar 2. And you can see a deep pullback bar 3. So in trading range, we get 75% pullbacks, and that's a 75% pullback bar 3. That starts the leg 2, bar 4. So that was a really quick leg 1, leg 2. Leg 1, pullback, leg 2, second leg trap into previous resistance. On trading range days, second leg traps are very common. So be careful if you're looking for continuation here. maybe looking for continuation here or here. Just be careful. Bar 5, bear bar closing on its low. If you're a bull, I think you should be definitely be thinking. If you're a bull, you should get out when you see bar 5. That's a bear bar closing on its low in a bear regime. You could see continuation. Bar 6, small bars with tail, so it's more of a pullback than it's a trading range bar, which means it's two-side trading. It's more of a pullback than a bull bar. Bar 7 rallies and sells off. Again, another outside bar. And if we look at the low of 7, we sold off, but then look at 8. It barely sold off before rallying. So this would be a trading range, this being the low, this being the high. Both sides, when we're down here, bulls want to make it to the high. When we're pulling back, bears want to break out in a measured move of the trading range. Bar 9, good bear bar closing on its low, below the EMA, below the higher time frame EMA. So a lot of confluences to get out of longs. Bar 10, again, it's a trading range bar, but it's a pullback. Leg 1, pullback. Leg 2. Trading range bars, I call them a lot of times they're just pulling back because they show two-sided trading. So something to think about the context within trading within a bar with more tail. There's two types of bars. There's a trend bar like bar 30, and then there's trading range bars like bar 54, which is also a pullback because it shows bears sold off and then it rallied. Bars 11 and 12, two bear bars closing on its low. However, 11 does have some tail. It has more body, so we can classify that as a trend bar. Bar 13 rallies above bar 12's high and sells off, so that's a trend line break. Now we have a leg 1, leg 1, pullback, leg 2. Why is it? So I didn't count this as a. There's always two ways to count. There's two ways I count. I count opposite bars as legs, and I count trend line breaks. Both work, and you have to be cognizant. It's not like one is better than the other. You just have to be aware, like, okay, this is a trend line break. There's usually going to be sellers above a strong bear bar in a trading range. So strong bear bar, there's probably going to be sellers right around here. And there was. And this is also testing a breakout point here. So 13 is breaking the trend line. It starts to leg 2, and that leg 2 is met. Leg 1, pullback, leg 2 with bar 14. It went one tick below the swing point of 12's low. 15, 16, we start to see more sideways price action after multiple legs lower. So I did a quick rundown of the legs earlier. Leg 1, pullback, leg 2, pullback, leg 3. Leg 1, pullback, leg 2. Or you could say leg 1, pullback, leg 2, pullback, leg 3. So there's a lot of reasons to get out when we start to see 15, 16. Do you have reason that you see 16 you see 15 that's bad follow through at trading range lows. Trading range lows, this is yesterday's low 69. And we're trading just below that after multiple legs. 17, strong rally. I think you'd have to get out of shorts here, even though with seeing 18, we could say, like, why would we get out of shorts if 18 went right back to the 14 low? Well, when we see 17, we don't know 18 is going to happen. So if you're short here, you're risking the chance of a rally like this. Look at 55, 56, 57. You're risking the chance of a rally staying short above 17. If you're short here and you short the high here, you could get out at 50%, but I think it's best to just exit a losing position and reassess the situation. In trading ranges, we have buy vacuums and sell vacuums. So 17 is a buy vacuum testing the low of 11, and a sell vacuum testing the daily low. 19, bad follow through. If you short 18, you see 19, that's bad follow through. I think it's best to get out of shorts because now we have a lot of legs lower and we're getting bad follow through at lows. This 19 actually creates a double bottom, and we see a very big surge with bar 20. Good breakout. However, it could be climactic price action, and 21 goes more sideways. 22 is an inside bar. Inside bars are the only bars that are not breaking out. 23, bear bar closing on its low. I actually counted this out in the live stream, and I was saying this is 2 to 3 legs lower. So leg 1, for the bears. Leg 1, pullback, leg 2, pullback, leg 3. 24 is testing the high of 17, the high of 18. 18, when 18 sold off, this became resistance up here. There's sellers here, and then 20 trapped all the bears shorting. And when resistance is broken, it's turned support. So when price comes back, bears will buy back their losing position, That's what creates resistance into support, and vice versa for support into resistance. So bulls know that there's trap bears here, and they're gonna want to buy the breakout point, or you could say that's a breakout point, but there's a better term for this. They're gonna buy where the trap bears are getting out. That's gonna turn into support. It goes for a rally for 3 bars, leg 1, pull back, leg 1, pull back, leg 2, and that puts us 3 bars, three legs for the bulls. Leg 1, pull back, leg 2, pull back, leg 3. Here's the trend line break here. So leg 1, pull back, leg 2. And of course, 26 is not actually breaking 25 low. I'm just talking about there's a trend line break right here. This could also be seen as a second leg trap. That's how I would read it. Leg 1, pull back, leg 2, second leg trap. 27 is testing around the 5 low. And then they get back follow through 28, 29. 30, bear bar closing on its low. Same situation. If you're short here, I would get out. If you're long here, I would get out, because you're risking a bearish breakout. And we see that with 31, 32, 33. Good bear bars closing on their low. You could say this is some sort of a bear flag here. Wedge top bear flag-ish that had a bearish breakout. I think these bars are strong to get their own second leg. 34, 35, 36, 37 becomes a 2-legged pullback. You could also call it 3-legged. Depends how you want to count it. Nonetheless, it's a pullback into the EMA, and that sells off for a leg 2. Leg 1, pullback, leg 2. I said you can count, depending how you count this, could be multiple legs. Leg 1, we'll go like this. Leg 1, pullback, leg 2, pullback, leg 3. But just from the visible legs, visible bars. Leg 1, opposite bars, pullback. So leg 1, pullback, leg 2. 38 touches the EMA and sells off. 39 again, rallies into the EMA. There's a gap there. 39 rallies into the EMA and sells off. 40 inside bar, so that's breakout mode. Bearish breakout 41. Follow through 42, but that's bad follow through. It's not, the bears aren't able to close below 42's midpoint, and they're not closing below 41's low. Same situation 43. It's a bear bar closing on its low, but it's not closing below 42's low. 40. So that should tell you this is not the strongest type of trend, because we want to keep continuously seeing new lows. Just how in this trend, within 1 to 2 bars, there was a new high, new high, new high, and then sideways. So something to think about. We have 4 bars that are barely closing below the previous bar's low, and then we see the trend line break 46 starting the second leg. So this is strong to get its own second leg. Leg 1, pullback, leg 2. 47 is climatic, and it's a bear bar closing above its midpoint or just on the midpoint. So there's bullish tendencies down here because the market sold off and rallied. 48, another inside bar. We've had a lot of inside bars today. I think it's best to get shorts around 48, 49, because inside bars could, at trading range lows, could reverse, and that's what we see here. 49 rallies and sells off. 50, another inside bar, and now we have multiple legs lower. Leg 1, pull back. Leg 2, pull back. Leg 3. Leg 1, pull back. Leg 2, pull back. Leg 3. So I think it's best to start to get out shorts here. If you're still short on 51, definitely get out, because this is just a straight up bull bar closing on its high. So bulls bought it barely sold off, and bulls bought it right away for the whole 5-minute candle. Well, I shouldn't say the whole 5-minute candle. Let's actually look at it. Or minute one. There's a shallow pullback, 253, 254, and then it keeps going. So not the entire bar was, not that it wasn't 5. It wasn't 5 1-minute bars closing on its high, but there was 2 legs within here, and they're strong to get its own second leg. Shallow pullback on 53, rallies, bad close 53, goes sideways. Oh, excuse me, bad close 52, rally or side. Let me restart. So there's enough momentum for 51 to get its second leg. Pullback. Bulls are trying to break out, but it has a bad close 52. 53 goes more sideways, but it is a bull bar closing above the EMA. So that's something to note, that, okay, we've been selling, but now bulls are getting closes above the EMA. 54, it's a bear bar, is sold off and rallied, testing the midpoint of 51. I think this is a nice looking candle for a leg 2 trade. So we have 1, 2, 3, 4, 5 bull bars in a row. 54 is the first bear bar. It's a shallow pullback. It's kind of deep, but the close is above the midpoint, so it has more bull tendencies. And we can see 55 is a good bull bar closing on its high, and it produces a gap when 56 is printed. It would be better if 54 was a bull body, so then we can have 3 bull bars in a row when that gap is made. But there's a lot of bull tendencies in bar 54, so I don't think that's the worst gap. There's 3 types of gaps. I've mentioned them quite a few times, but I haven't talked about them. There's a gap below the breakout point. So see the EMA 50, 51, 52 gap below the breakout point. Then we have 54, 55, 56 gap above the breakout point. And here's an example 29, 30, 31, a gap on the breakout point. All gaps, but they do have different meanings. 56 follow through for 55, not making a new high, but then we see a new high again, a bull bar closing on its high, so that's good. When I say new high, I just mean temporarily. Obviously, this is the swing high, that's the swing high, so it's a minor high, you could say. 58 sideways price action. It's an opposite bar, doesn't break the low, but it is a bear bar, and that got bought up fairly quickly. 59, 60 sideways price action. It's pretty much a perfect doji. I'm indifferent about it. We are starting to test the previous swing high. 61 bear bar closing around just below the midpoint, but it has a tail, so it still has some bulls in it, but we want to see another bar like 58 to be very bullish, or not even a bear bar if you want to be bullish. 62 bull bar closing on its high. 63, now I think price starting to become climactic. We're definitely past leg 2. This could be a leg 1, leg 2. After this bar, this is definitely the leg 2 at least. So what do I mean by that? Depending on how you want to count, leg 1, pullback, leg 2 is how I was counting. And then we see 63 is becoming climactic into resistance. You could say leg 1, pullback, leg 2, pullback, leg 3. So that's what I meant. There's multiple ways to count this, but I do think we are approaching around the third leg. And whenever we see a third leg, we know that the probabilities for trend continuation do go down. And then we see that with the following bear leg. 64, good follow through for 63. 65, bulls are trying to break out above the EMA but get bad follow through. 66. 67, I think, is a strong bear leg in terms of it selling off and then this becoming a pullback. Bad close, but it's a leg 1 pullback, leg 2. 68 is a pullback. It's breaking the 67 high. It actually looks like bulls are wanting to rally again, but the high one in a third leg in a training range is generally a better fade. 69, bear bar closing on a slow. 70, good follow through. 71, breaking the trend line. Leg 1, pullback, leg 2. We get more sideways price action, and then bears complete the leg 2 for this with 77 and 78. The sideways price action closes the day. Here we are for the gaps, and I talked about the gaps a little bit on the three different types of gaps we have. We have a gap on the breakout point, we have a gap below the breakout point, and above the breakout point. These things mean different things. I'm gonna get into that more in the membership videos because I try and stick to just leg 1, leg 2s and market cycle for the daily breakdowns, because that is actually the main thing I use to trade is market cycle, leg count, and then after that I just figured out how to enter. I'm only entering limit orders for now, but as time goes on, we'll probably introduce market orders again. Now I have a good understanding of limit orders and trap traders. Big gap here, 22, 21, 20. Third time to charm. Big gap, bar 20, trapping these bears here. As price comes back, bears will buy back shorts, and that will cause resistance turn support, and bulls buy support, and that causes another rally. Sell off, trapping bulls. Bulls have limit orders set here. That's how gaps are created. Limit order traders get trapped. Trap the bulls. They don't actually really get. They get. If you're quick enough, you have a limit order here. Quick enough to buy the close, you barely get out. I just think it's best to get out. I don't think it's good to average down. There is a time and place to average down. I don't think this situation is good to average down. 31 sells off. 30 and then produces a bear gap. 31, 32, 33. 3 gaps in a row. Sean to get its own second leg, and we see a 2-legged pullback here. No gaps on here. There's a small gap here, but it's very weak, and it starts with a bull bar. Then we have multiple gaps here. Great for the bulls. They actually kept this gap open. And now we have some bear gaps open. So maybe sideways price action for the overnight session. Breakout right here. It's above the EMA, and that rallies. We get another breakout here. Well, we get breakouts everywhere, but I'm talking about the gaps. And then we get a bear leg producing a gap, 68, 69, 70. Strong to get a second leg. 71 tests the gap's high, so it's not the strongest bear leg since the high point of the gap was tested. Hold on. So a little bit past. So about the 70% trading range behavior, big down, big up. Let's go over the measured moves real quick. I had a couple measured moves drawn out today. I was thinking this would be a bearish objective. Bears came close, but ultimately failed. Had this one also drawn out, and bulls came. Bulls didn't come. Well, it's met here, but you'd get stopped out one tick below the low of the day. So that failed too. The measured move failed. You could still take that for a scalp. I think this is the trade of the day. I like this trade here. It's just a clean breakout and then a two-legged pullback. Short the high of it. 1-to-1 is also let's go straight to the high of the pullback. I mean, none of us are. If you caught the exact turning point, that's great, but the majority of us didn't. So 1-to-1 is technically met, but I think most of us would either short here or short here, and for that simple reason, 1-to-1 was not met. Then we have a bullish breakout here. Let's go like that. Put it at the pullback. Put it here. 1-to-1 is met both ways. I think buying 54 is a good buy, and 1-to-1 is met quickly. 2-to-1 is also met. So I don't go for 2-to-1, but that was met. 3 bars here. Shallow pullback. Put it there. That's also met. You could trade this. You would be in a trade if you're trading this, but I don't know if it's best to enter new longs. I think that's where you gotta start taking profits. 3-legged bear channel here. Put it at the double top. This is a double top pullback. Excuse me. This is a double top. The pullback is creating a double top. Sometimes I just whatever. So yeah, double top. It's a pullback. Creates a double top. So bulls that buy here, price comes lower. Price comes back to the original price. Bulls sell longs, bears short prior. This turns resistance because there's now trap bulls. So when it comes back, turns resistance, and then 1-to-1's met within 2 bars. Pretty good day. Thanks for tuning in, everyone. Yeah, I didn't trade today, but for those who were trading, look like you guys are having a good day. Hope you guys are learning. If you learned something, share the show. Don't be a hoe. And I'll talk to you guys tomorrow during the live stream. I enjoy talking to you guys. You guys have a good one. And yeah, I'll talk to you tomorrow. Thank you for tuning in, everyone. I always appreciate your time. Thank you. Bye.